Welcome to ICB's crash course entitled Overcoming Objections. Before we start, note that we will be happy to provide you with a transcript of this presentation. Let's start with the objection, I may never need it. True, you may not need extended care, but if you do need care and you don't have any coverage, I would bet that you or your family would be willing to pay just about any price to go back in time and purchase a policy. We know that people turning 65 have more than a 50-50 chance of needing long-term care. But look at it this way. If you purchase coverage and you never need it, your family will be thankful that you never needed it. After all, no one wants to need extended care. If you purchase coverage and you use it, you and your family will be very thankful that it was purchased, even if it's a small policy. And finally, if you do not purchase coverage and you need care someday, you and your family will desperately wish you had purchased a policy. My spouse will take care of me. Yes, your spouse or partner may be your primary caregiver, especially if you want to keep your partner at home. This might mean that the life of your spouse is over as he or she knows it, especially if the spouse needs care 24 hours a day, 7 days a week. You know that taking care of your loved one who is chronically ill can make you chronically ill? Wouldn't it make sense to be your spouse's care supervisor, not the full-time caregiver? You see, having a policy with strong home care benefits can help your spouse or partner stay at home where they want to be. Well, before I do anything, I'm going to have to ask my children. Yes, you should absolutely talk to your family about this important decision. You might even be surprised how relieved they are to hear that you are considering coverage for the greatest risk left in life. After all, they may not have thought about their role if you were to need extended care for an injury or an illness. In most cases, the adult children will be grateful that you are creating a structured care plan and that you will be able to afford high-quality extended care services. In fact, they might even pitch in to pay for the policy. Well, actually, I think my kids will take care of me. Yes, your children love you and will help when they can. However, your children will likely still be in their working years and may have to reduce their time and earnings at work while caring for you. Would they be willing to move in with you? Or you move in with them? Will the children equally bear the stressful burden of caregiving? Or will they fight about it? Having long-term care insurance does not mean your children will not help you. It means that someone you love doesn't have to be a 24/7 caregiver. Sometimes a couple will say, we don't need long-term care insurance because we don't have kids. That doesn't mean you don't need a plan for extended care. Perhaps the biggest risk for most couples is when one spouse or partner becomes chronically ill at a relatively young age. If the event lasts long enough, income will be diverted to pay for care and assets may be depleted, which then jeopardizes the standard of living of the surviving spouse. Well, what if you're talking to someone who is single, children or not? Like married couples, single people want to stay home for care, even 24 hours a day, 7 days a week care. Not having a spouse or partner means that you will need to take extra planning steps to be able to stay at home. Some form of long-term care insurance is a must, especially with strong home care benefits. What if they say, we need to think about it? This objection is usually their nice way of saying, no, we're not interested, or no, this just isn't important to us. During your sales presentations, be sure to ask them why they are interested in talking about extended care planning in the first place. There must be a reason. Ask about who they know that has needed care, or what would happen if one of them suffered a stroke or developed dementia. What's the plan? Everyone hopes that they don't need care someday, but hope is not a plan. Ask them, what is your current extended care plan? Listen to their answer. See if you can find a way to address their objection. Next up is the very common objection, especially for traditional standalone long-term care insurance policies. Hey, if I don't use it, I lose it, and I'm not interested in that. Not anymore. Today's newer modern solutions can include money back if you cancel your policy, or a death benefit if you don't use the policy. In addition, most of these new products have guaranteed premiums. Another very popular objection. It's just too expensive. Once again, in his mind, I really don't think I will need it, especially at this price. Well, if you think long-term care insurance is expensive today, wait until you see how much care costs. Understand that modern plan designs are structured to cover a portion of the cost of care, not full coverage. Be sure that you are not quoting policies with excessive premiums and benefits. It's always easier to sell up if they want and can afford higher benefits. And memorize this saying: having some coverage is always better than no coverage. The "we're going to wait" objection is very similar to "we're going to have to think about it" objection. Obviously, we're talking about classic denial here. What they are really saying is that this isn't important enough for us to take action. Of course, the longer they wait, the more expensive the policy becomes. And the longer they wait, the more likely they will become uninsurable. In fact, 24% of people between the ages of 60 and 64 are declined for long-term care insurance. Those between ages 65 and 69 are declined a third of the time. You will never be younger than you are today, and most likely you will never be as healthy as you are today. Let's get at least some coverage now. And if you want to in the future and you remain healthy, we'll stack on another policy. Yes, you can have more than one policy. Hey, it sounds like a good idea, but I think we're just too young to do this. No one wants to purchase coverage too soon, but how can you know when your health might change? It would be better to purchase coverage too soon rather than wait one day too late. The fact is that there is no perfect age to protect against needing extended care. When people believe they are too young to purchase, they picture themselves as they are today, not how they might look over 20, 30, or 40 years in the future. Ask if it is reasonable to expect that, as we age, the chances of developing a chronic illness or becoming frail and fragile increase. Buying coverage at their current age locks in their insurability, and the premiums will never be lower than they are today. The suicide objection, also known as "I will take care of it." That's perhaps the hardest objection to talk about and overcome, as the people who say that are usually pretty sure of their intentions. Whether or not they ever go through it, that's a different story. And the rise of physician-assisted suicide across the country might give people some false expectations. Maybe the first thing to say might be this: in my experience, people usually don't go through with it, especially when dementia is involved. That's because the decline is very gradual. And if your loved one has Alzheimer's or another form of dementia, assisted suicide is not an option because the person suffering from the disease can no longer make a legal decision to end life. Also, you might say to your prospect, I think you might have a misunderstanding of what most long-term care looks like. Most of the time, care is provided at home, not in a nursing home. Nearly 70% of long-term care insurance claims begin at home, and about 60% of claims end at home. Having a long-term care policy means that we can keep you at home or consider one of those new fancy assisted living facilities. And let's not forget that I'm sure that there are many people who love you that would be very upset if you took your life. We talked to our advisor and he said we can self-insure. Actually, there's no such thing as self-insurance. You are not an insurance company and you cannot be a risk pool of one. What you are really doing is self-funding. We can show you a smarter way to self-fund a long-term care event. You see, having insurance provides leverage. Using your own money provides zero leverage. Think of this, if your mortgage is paid off, you would never cancel your homeowner's insurance policy, even though the chance of the house burning down is less than 1%. So why do you keep your homeowner's policy if your house is paid off? Well, it's because if the house is destroyed by fire, you want the insurance company to rebuild it. In other words, you want them to pay for it. That's leverage. You've got about a 50-50 chance of needing care someday. Let's look at using a small portion of your savings to purchase an asset-based policy that provides a death benefit if you don't use it, money back if you cancel it, premiums that can never increase, and long-term care benefits. Now that's leverage. My neighbor has long-term care insurance and her premiums have doubled. Well, it's true that traditional standalone long-term care insurance policies sold over the last 30 to 40 years have had rate increases. Simply put, early policy offerings were based on faulty assumptions. First, insurance companies believed that maybe 5 to 15% of their policyholders would lapse their policies. Instead, many companies report that less than 1% of their policyholders cancel their coverage. Second, as longevity increased, so did the number of claims, and the length of claims were longer than expected. Finally, the amount of interest earned by the insurance companies on long-term reserve investments fell to historically low rates and remain there today. Even with premium rate increases, most policyholders have kept their coverage and have the option of reducing benefits, which then lowers the premiums in turn. Today's traditional long-term care insurance policies are priced with 40 years of data and take into account increased longevity, very low lapse rates, and extremely low interest rates. Therefore, modern policies are priced much more conservatively and responsibly than ever before. Well, I don't need long-term care insurance because I have health insurance, or I have Medicare. This is also known as the government will take care of me objection. Health insurance policies provide very limited coverage. Medicare provides a small amount of LT services, but only if you qualify. For Medicare to pay for long-term care, you must have been admitted to a hospital as an inpatient for at least 72 hours. That's 3 full days or more. You must then enter a Medicare certified nursing facility or rehab center within 30 days of that inpatient hospital stay. And you must need skilled care, such as physical or occupational therapy. Note that those with dementia typically do not need such therapy and therefore will not qualify. If you meet these requirements, Medicare can pay for up to 100 days of care in a nursing facility. Note that many people on Medicare entering a hospital are not considered inpatients unless they have a life or death situation. Instead, patients are now deemed to be under observation status, which means that they are outpatients. As such, Medicare recipients admitted to the hospital under observation status for 3 days or more will not receive coverage if admitted to a nursing home or rehab facility. The bottom line is this: most people receive care at home, not in a nursing home. Do not rely on governmental programs. Finally, I already have long-term disability insurance, so I don't need long-term care insurance. Well, disability policies replace a portion of your income if you can no longer work. If you are disabled, the proceeds you receive from a disability income policy can be used to pay the mortgage, buy groceries, and pay medical bills. It's very unlikely that anything will be left to pay for long-term care services. In addition, most disability income policies end when you retire or reach age 65, whichever comes first. Having disability income insurance is smart, but it does not negate the need for long-term care insurance. Just a few final thoughts and we'll be finished. Everyone needs a plan for extended care. Keep in mind that the policy you sell is not the extended care plan. The policy that you sell funds the extended care plan. At ICB, we offer the finest carriers and products in the market. Everyone that you talk to at ICB are experts in long-term care planning. We are here to make you successful. Just let us know what we can do for you.